Hi everyone, it's James here. I thought I would cover a really interesting story that was posted on X a couple of days ago. And effectively, the story is called "There is no bear market in Bitcoin adoption." And I know we've had a lot of weak price activity over the last few months. Bitcoin's drawn down from 126,000 back in October to just under $70,000 today. And so, yeah, we have had a 50% correction, but some of the leading measures fundamental to Bitcoin's future price potential actually look quite bullish. And so we're going to jump into a few of these numbers today. This post is by a company called River. They're based out of the US and put out some really interesting research. Institutions bought 829,000 Bitcoin in 2025 alone. And if we look at the first graph here, for most of Bitcoin's history, individuals have been the main driving force behind Bitcoin's price appreciation. And that started to change in the last couple of years, where there's less Bitcoin owned by individuals compared to that owned by the amount of funds, businesses, and even governments, all increasing their allocations to Bitcoin. And so what we're seeing here is a bit of a rotation where long-term holders are selling some of the Bitcoin that they own. Individuals with large amounts of Bitcoin have been selling, taking profit. They don't want to go through another bear market. Companies, funds, ETFs, and investment advisors, which we'll cover in a minute, have been buying that up. And so that's what you can see here in this graph. They also put forward a projection, and it really is going to be a continuation of the trend from their perspective. So we have an additional 822,000 Bitcoin to be mined, and they are forecasting that funds and ETFs are going to scoop up another 2 million Bitcoin by 2035, already having 3.55 million Bitcoin held today. Businesses will increase their holdings by nearly 5 million Bitcoin. Governments will increase their holdings by 1.35 million Bitcoin. Meanwhile, individuals could let go of 7.5 million Bitcoin. As price increases, individuals are more likely to want to realize those profits, and long-term investors, long-term capital that we see, businesses tend to, align more closely to those long-term time horizons, especially governments as well, buying this Bitcoin that's on sale. So the other really interesting story here was that investment advisors in the US oversee $146 trillion in assets. These investment advisors really were only able to enter into the market in the beginning of 2024 when Bitcoin ETFs launched in the US. Now, what's really interesting is that despite the price volatility, every single quarter since January 2024, when the first Bitcoin ETFs launched, has been a positive inflow in terms of the amount of Bitcoin ETFs held by registered investment advisors. And so that's, gone from 2.6 billion in Q1 2024 to over 12.5 billion at the end of 2025. And so that's, a 5x increase in just 2 years. 29 of the top 30 registered investment advisors already own Bitcoin. The other interesting insight is that their allocation is still very small. So on average, the investment advisor has a Bitcoin allocation of just 0.008%. Now, if you think that's going to go to 1% or 2%, that's potentially $1 to $3 trillion in Bitcoin investments that could go into this asset class. The third really interesting insight from this post is that 60% of the top US banks are building Bitcoin products. So if we look here at this list of 25 of the largest investment banks in the US, a lot of them, so 60% of them, have already announced that they're going to be allowing trading of digital assets. Some of them do limit it to wholesale and high net worth clients only. I suspect that's going to change over time. Probably a third of the major banks are offering custody solutions as well. So for example, PNC Group and HSBC, State Street, all have launched custody solutions around digital assets. And again, we think that this is going to turn green for pretty much all of these institutions over time. They're going to have to offer digital assets to clients. Otherwise, people will up and leave and go to other banks. Now, public companies investing in Bitcoin has grown substantially over the last 8 years. Going to 2018 to where we are today, it's multiples, several multiples higher in terms of the amount of Bitcoin that's being held by publicly listed companies. And so what we see is roughly 1.4 million Bitcoin is now held by publicly listed companies. 6,000 of that is Bitcoin treasury companies, the largest of which is Strategy. You've also got Metaplanet as well in Japan. But 590,000 Bitcoin is held by traditional public listed companies that aren't Bitcoin treasury companies. The overall number of publicly listed companies holding Bitcoin has also increased significantly. So from 13 publicly listed companies just 6 years ago to today in 2026, there's over 194 publicly listed companies with Bitcoin on their balance sheet. This is an accelerating trend. And again, even though price is down over the last 4 months, all of these fundamental metrics, which would lead price, paint quite a constructive picture in terms of where we see Bitcoin's long-term price trajectory. Also, beyond just the major institutions buying Bitcoin to put it on their balance sheet, the number of merchants, so that's your cafes, your burger chains, restaurants, shops, etc., that are accepting Bitcoin as payment has tripled, while global usage has grown by 74%. So Steak and Shake in the US is one of the major examples. So there's now over 20,000 merchants accepting Bitcoin for transactions as opposed to cash. And one of the main reasons they're doing this is that they can actually save a significant amount of money as opposed to going through Visa or MasterCard payment rails where they're losing anywhere from 1% to 3%. So look, there's lots of businesses and different sectors that are getting into Bitcoin and digital assets. But I think the key takeaway from this post by River is that institutional adoption, which leads price activity, is up and to the right. And so we view this moment in the market as quite a opportunity to accumulate, build your position in Bitcoin at much lower prices. Of course, you've got to do that with consideration as to your overall portfolio and manage your risk accordingly. But there's no doubt that the trend for major institutional involvement in this asset class is only increasing. And we think that later in 2026, hopefully we'll get the Clarity Act signed into law. There's a provision being fought over at the moment as to whether stablecoins can offer yield, or crypto companies can offer yield to investors for holding stablecoins on the platforms. A lot of the major banks are fighting against that in court. We think it's quite likely that investors and depositors will be able to earn a yield on their stablecoins outside of just traditional banks, and that this really is just going to be a one-way trajectory. So if you can stomach the volatility, I think 2026 and 2027 are going to be pretty positive, but we have to be patient. And I hope you enjoyed this little bulletin.